What is going on, investors? Hopefully, you guys had a great day out there. Time to talk about ROKU, ticker symbol ROKU. The stock just reported its earnings after the bell. We see here the stock is up about 3% in the after hours after a year-to-date run of, just 41% year-to-date. And over the last year, up 260%. It's actually a favorite of Cathie Wood's ARK-Invest. We see here their favorite stock is, they're pretty well known for making this public, is Tesla, and Tesla is still the number one holding in their flagship ETF product, but Roku is right there and is catching up. So, shockingly, right behind Tesla. And, gosh, maybe they have some inside information on this, because when we go through the numbers here, the Q4 numbers, kind of full year numbers, these are absolutely spectacular. Now, the reason why, or one of the reasons why the stock is popping in the after hours, is because they swung to a Q4 profit, and it kind of surprised investors to a certain degree. Well, I thought what else they also did was they gave some guidance. They're going to run into some tough comps. Well, Netflix, a lot of companies that did really well last year, maybe like even Zoom, they're going to run into really tough growth rates to kind of overachieve into this year. I thought management did a nice job explaining that. This is what a sign of good management. Okay. They're admitting to this right now, kind of getting out in front of it and letting you know, look, the back half of the year, it's going to be tough for us to meet our growth targets because we had such a great year last year. I think that's pretty good. And then on top of that, you got ARK just loading up into Roku. I've been seeing them add to their positions of Roku over the last few weeks and months, and they've really built up a massive position in Roku. And whenever ARK-Invest does this, they believe that Roku is a core holding. Now, these are their top 10 holdings, Shopify. A lot of these other names are very recognizable, but when you get up into this top tier holdings, boy, they're probably going to hold this one at least for the foreseeable future. Now, let's jump over to the numbers, and then we'll jump over to the stock chart, see if there's a place where we can kind of catch this one. I tell you what, I've been trying to catch this stock, just haven't been able to do that. Now, active accounts in millions, up 39% year over year, up to 51 million. Streaming hours up 55%. So not only they're getting more active accounts, they're streaming more, which Roku, it does have ads running on its platform. So this streaming hour is kind of a key metric, because more streaming hours means more advertisements are playing. Average revenue per user, that's ARPU right here, up 24%, up to $28.76. That's a lot, okay? Especially when you compare this to like a Netflix or some other, streaming services out there. $28 per average per user is really high, honestly. Now, we've got some platform revenue here and player revenue. As we've seen here, player gross profit, very minimal, okay? They tend to give them away, but they sell these players at a very low margin to feed the high margin platform revenue up here. We see that's up 81% to $471 million. I mean, just quarter over quarter, we're having great growth rate, let alone year over year. Gross profit coming in really strong, okay, just on the player side, but here's our total gross profit, up 89% to $305 million. And now we see here income from operations. We noticed we had a loss in Q4 of 19, a loss. We swung to a minor profit in Q3. Well, they've turned the corner. I tell you what, in the most recent quarter, they earned $65 million from their operations. From an adjusted basis, probably stripping out stock-based compensation, things like that, an impressive $113 million. On the operating side, they're up 34%. That's operating expenses. That actually is pretty nice. You see here, quarter over quarter, we went from 202 on the operating expense side up to 240. Okay, I know that's a jump, but it's not that much considering how quickly these revenues are growing and our income from operations down here as well. Just extraordinarily impressive. Now, from the balance sheet perspective, everything looks super strong. We've got the end of the year here at December. We had about $1 billion in cash, got some in receivables. Total assets ticked up to $2.2 billion, up from about $1.5 in the previous year. Now, they have financed this company with a little bit of debt. So we've got our long-term debt here. That is, $90 million. $90 million is not anything to sneeze at, okay? And So, and here's our current portion of debt here. Only about 5 of it, or 4.8, is due currently. So in general, you got about $95 million worth of debt on this, but they have plenty of cash on the balance sheet. And like I said, they've swung to a profit from income from operations. I don't necessarily think that's going to go anywhere. When you're achieving this type of growth rate, keeping expenses like this under control, we see your expenses are growing year over year, but when you're growing your platform revenue this quickly at 81%, doesn't matter too much. Now, the stock has just completely been on fire. Okay, since November, this stock was back in like the $220 range, and we've bolted on another about $200 on this stock. It is making a very, very clean uptrend. This kind of reminds me of the Nike chart for some reason. Nike kind of just went on the same kind of run. Now, it's peaked below kind of this trend line. Trend line might not be drawn in here perfectly, but now we're sitting right below it. So it'll be interesting. Can it peak back up here where the upper trend channel was and continue up into maybe $500 per share? Now, the other scenario that could potentially happen is maybe we get a broad market kind of sell off, maybe something like this, and this thing retraces. I think your first spot is down to the 50-day moving average, wherever that might be. Now, if it happens for some reason in the next few weeks, it's in the 380s to 390s. Now, as time goes on, this 50-day moving average just keeps trending up, and you could get a pullback to that, because when we zoom out Roku, you see here, anytime this stock has come close or traded below this 50-day moving average, it has been a buy, and that has been the case at least for the last year or so. So if you want to pick this one up, I don't mind. You want to just ride this trend right here, and you want to buy it right here because you think this trend is just going to continue, I got no problem with that. When you come over here and look at it fundamentally, it's not that bad. And then when you got someone like ARK that's basically like cheerleading this along with Tesla, I mean, you know, mentioning Roku alongside Tesla as your top holdings, probably going to be a good sign. So we'll see what happens with this one, but that was Roku. We'll see where it trades tomorrow, but this is a very strong stock, and it's incredibly well run, in my opinion, when you come and look at these financials. And boy, I think you want to come in here and take a look at what ARK is investing in, because they either have great research or they have some inside information, or maybe a little bit of both, because, you know, loading up on Roku ahead of these great numbers was a great move in hindsight. So that was Roku. Hopefully you guys enjoyed this one. We'll be back again with more videos tomorrow and the weekend. Thanks for tuning in. Good luck with your investments.